Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Today's date is Thursday, June 15th, 2017. I'm drawing your attention here today to Mattel, M-A-T is the symbol, down about 7.5% today. The reason why I want you to pay attention to this is because it's very close to a buy level. All right, and I'm going to zoom out on the chart and show it to you right now. Very classic double bottom right here. And again, just look at the pivot low from basically October 2015. Put a trend line right in there, and you get a beautiful little pivot low right there. And again, that's right around the 1950 level. So we're literally just $1 away on Mattel from a major support double bottom. And this is going to be a buy level, folks, in my opinion. I'd like to see it hit within the next couple days, maybe by early next week. If it does hit, I will be looking to buy this because basically you have to think about it this way. First of all, it's down today 7%, 7.5% because it was downgraded. When you see an analyst downgrade near lows, it doesn't usually tell you that there's a lot more downside. Usually if there's a final flush because of the downgrade, maybe some weak hands getting flushed out, then that's it. So that's what I'm thinking right here. And again, folks, obviously downgrading a stock now is a little late to the party, in my opinion, and that's probably one of the good contrarian indicators out there for this stock. Add into that a major pivot low from October 2015, and you have yourself a beautiful opportunity here to buy this stock, MAT, again at $19.50. The only other thing I wanted to mention in this video today, folks, is a message about biotech. If we go to biotech stocks, one of my favorites here, GILD. So earlier in the day, all the biotechs were selling off because supposedly Trump was going to sign an executive order in relation to biotech pricing or something. Well, it turns out that that really was just a kind of a flap in the wind. He's going to sign some executive orders, but it doesn't have anything to do with pricing of drugs per se. And you could see that the biotech sold off early on that and then reversed here. This, to me, when you see this price action, this is big money coming in. I love this stock down here. I love a lot of biotechs. Any biotech that's near the lows that has a solid foundation. And let me just talk to you a little bit about GILD. GILD has over $10 billion in cash on their balance sheet. They pay a 3% dividend per year. This company is literally trading right now at around an 8 PE. Think about that in comparison to other stocks. I was just, one of the stocks that I've been kind of shooting the breeze with our members at InTheMoneyStocks.com is 3M. All right, now 3M basically makes like household products, different industrial. It's basically an industrial. It's been a stock that's kind of just been, all right. So it is what it is basically. It's not a growth stock. It's not a tech stock. It's just kind of a slow grinding stock. So this stock, one of the most overbought pieces of, well, listen, it's not a piece of junk. I mean, it's a valid company and it's a great company, but at this valuation level, it's ridiculous. This is trading right now at over a 25 PE. All right, now, if that was a tech stock, I would say, okay, 25 PE, no big deal. That's actually a reasonable valuation. But when you think about this stock and the growth that they're going to be having in the coming years and how little that is, this is a ridiculous valuation. Now, compare that to something like GILD, which, again, is trading at literally an 8 PE. Think about that. 3M is at a 25 PE. And you have GILD at basically an AP. Now, granted, because of a slowdown in some of the drugs and so forth, their growth is slowing, obviously. But still, I mean, you're talking about one of the best biotech mega caps out there on GILD. So, listen, doesn't mean it can't go a little bit lower. But, again, if you're a longer-term view investor, this is probably something that I would definitely be intrigued by. Think about it again, 3% dividend stocks basically at its multi-year lows. If I zoom out on the chart, I mean, look at that recent history of the chart going back a couple years. It was over $100, basically in half at this point. And at some point, the valuation of this stock is going to start to go north based on the chart, and you'll see the PE moderate. I think this should be trading at a 15 to 20 PE, which basically is a double from here. Okay, so again, I just wanted to pass that little tidbit along. I think it's just interesting to look at the valuation in terms of price to earnings versus some of the other players like 3M out there, which is a great company and all, but again, the growth, it's not one of those exciting companies, and historically 3M has had a PE somewhere in the 10 to 12 range, yet somehow it's double at this point in time, and especially its multiples of the GILD trade, which is a much more exciting drug biotech stock. All right. Anyways, I'll leave you with that, but I encourage you. We took 2 nice profits in the research center today, so 2 more winners to put in the bank. The profits continue to come in full force right now. Volatility is coming back into this market, which is exactly what we want as swing traders. And again, the profits will continue to be produced here at InTheMoneyStocks.com. So come take the 7-day free trial. Again, there's a 7-day free trial. Come take it, profit with us, understand why we take these trades, how we take these trades, and again, you can basically go off on your own, do it for the rest of your life. It's a great methodology. It's unique to InTheMoneyStocks.com, and again, come to our website, InTheMoneyStocks.com, take the 7-day free trial to the Research Center. Take care.